SpaceX just closed at 160.95, up 19%. Every retail trader is screaming by the dip that never came. But here's what they don't see. The RSI is at 100. Not 90. Not 95. 100. That has never happened on a weekly close in any momentum stock I've tracked in 15 years. There is one danger zone and one hidden opportunity right now. I'll show you both. Stay to the end because I'm giving you 3 exact levels you can trade tomorrow, including a counter-trend short with a risk-reward ratio that will make your jaw drop. Session bias, trending but terminal. We are in an exhaustion melt-up. The trend on weekly, daily, and 5H is strong buy. But that's the trap. The invalidation level that flips everything is 135 on a daily close. Write this number down, 135. If we break 135 today, the entire structure resets and the next support is psychological at 120. The herd is positioned long. Every SpaceX to 2 trillion headline is getting screenshot and posted. That means the fuel is gone. The only fuel left is trap shorts covering, and there are none left at these levels. When everyone is on one side of the boat, the tip is near. Let me walk you down the timeframes because this is where the divergence becomes terrifying. Starting on the weekly chart, the moving averages are stacked bullishly. MA5 at 143, MA10 at 139, MA20 at 137, MA50 at 100. 36, MA100 at 135.5, MA200 at 135.26. That's a golden cross waterfall. Textbook. But the RSI on weekly is at 100. That means every single weekly candle for the last 5 weeks has closed at the absolute high of its range. No seller has stepped in. That is unsustainable. Now drop to the daily. Price is at 160.95. The MACD is at 37.59. That's massive positive momentum, but look closely at the histogram. The bars are getting shorter. That's the first warning sign. The Williams %R is at negative 8.8, deeply overbought. The CCI is at 114, which is actually not extreme yet, but the RSI on daily is also pinned at 100. Here's what most traders miss. The stock is at 0. Stochastic at 0 while RSI is at 100. That is a mechanical impossibility on a normal distribution. It means the price action has been so vertical that the stochastic calculation has broken. This happened on GME in January 2021. It happened on Doge in May 2021. Both reversed violently within 72 hours. The 4-hour chart shows price trading 2 standard deviations above the 200-period moving average. The ATR is 12.6. That's huge volatility. ADX is only 13.3. Which is bizarre because ADX measures trend strength independent of direction. 13 is weak. So we have a massive price move, but their trend strength reading says meh. That's a hidden divergence no one is talking about. The next signal changes everything. If the 4H candle closes below 150, the momentum algos will start liquidating systematically. Key levels. Support 1 is 150, psychological round number. Support 2 is 143, which is the 5-day moving average. Support 3 is 135, the pivot, and the 200-day zone. Resistance is thin because we are in price discovery. Resistance 1 is 165. Resistance 2 is 175. Resistance 3 is 190. And here's the cross-asset linkage you need. SpaceX is trading like a crypto meme coin, but it's being funded by the same hedge funds that are short Tesla. There's a pair trade happening. Long SpaceX, short Tesla. If Tesla catches a bid, that pair unwinds and SpaceX gets sold to cover. The headline yesterday, How SpaceX Broke the Space Launch Cost Curve, is the catalyst. But here's what the news didn't say. The cost per kilogram to low Earth orbit has dropped from $65,000 in 2010 to under $1,500 today. SpaceX owns 80% of that reduction. The institutional thesis is a monopoly on orbital infrastructure. That's why analysts are slapping a $2 trillion valuation on the private market. But let me connect the dots for you. The same institutions marking SpaceX at $2 trillion are also the ones getting liquidated in private credit. The funding for these marks is coming from levered long positions. Yesterday's FOMC minutes showed that the Fed is not cutting as fast as the market priced. Real yields are moving higher. High-duration assets, like a space company with no earnings, get crushed when real yields spike. The 1 to 2 week directional lean is still bullish as long as we hold 135. But the probability of a sharp 10 to 15% pullback in the next 5 trading days is now above 70% based on the RSI Extreme alone. Here's the event that invalidates everything. If Elon Musk announces a Starlink spin-off IPO filing, we gap up to 200 overnight and every bear gets run over. That's the tail risk. Do you think we see 190 before we see 130? Comment 190 or 130 in the comments right now. I'm tracking consensus and I'll read the results in tomorrow's breakdown. Most people skip this section. That's exactly where the money is made. Keep watching. I'm giving you 3 distinct strategies with exact prices, exact stops, and exact targets. No vague watch the level nonsense. Specific numbers you can type into your platform right now. Strategy 1, the sniper, conservative. This is for traders who want a 1 to 3 risk reward or better and can wait 24 to 48 hours for entry. The trigger condition. Let the price pull back to 150 exactly on the hourly chart, and wait for an hourly candle to close above 151. That confirmation tells us the dip is being bought, not just a dead cat bounce. Stop loss goes at 147. That's $3 below entry, or 2% risk. The logic is simple. If we break 147, the 5-day moving average at 143 becomes the next target and your thesis is wrong. Take profit 1 is 165. That's a $10 move from 155 average entry, roughly 6.5%. Risk reward on the first target is approximately 1 to 3.2. Take profit 2 is 175. That extends the risk reward to 1 to 8.3. What voids this setup entirely? A daily close below 150. If we close the day under that round number, the bullish structure is compromised and you wait for 135 instead. The sniper, conservative, entry. 150.00 on 1H close above 151.00 stop loss. 147.00 take profit 1. 165.00 take profit 2. 175.00 risk, reward. 1:3.2 R to TP 11:8.3 R to TP2 invalidation. Void if daily close below 150.00. Strategy 2, the active trader, standard. This is for traders who want to fade the extreme but wait for the first sign of weakness. Mean reversion with momentum confirmation, entry condition. Price breaks below 155 on the 15-minute chart, then pulls back to retest 157 as resistance. That's the classic failed breakout setup. You enter short at 157. Stop loss placement is critical here. 161. That's only $4 above entry. Why? Because if we reclaim 160, the bulls are still in control and you're fighting the daily trend. Target 1 is 143, the 5-day moving average. That's a $14 move for a $4 risk. Risk reward of 1 to 3.5 to target 2 is 135, the pivot, and the 200-day zone. That's a $22 move for $4 risk. 1 to 5.5 once target 1 is hit at 143. You trail your stop to break even plus $1, so break even at 144. Then let it ride to target 2. To type your SpaceX range for tomorrow in the comments right now. 130 to 170 or 150 to 180. Let's see who's aligned with the data. The active trader, mean reversion, entry. 157.00, 15-minute retest after break below 155, stop loss. 161.00 take profit 1. 143.00 take profit 2. 135.00 risk, reward. 1:3.5 R to TP 11:5.5 R to TP2 trailing rule. Move stop to 144.00 after TP1 hidden validation. 1H close above 160.00. Strategy 3, The Aggressor, high risk. This is for counter-trend traders who believe RSI at 100 is an automatic sell signal. Momentum chase on the short side. Only for those who can lose small and manage risk aggressively. Entry condition. Market price right now, or on any bounce to 163. US selling into vertical euphoria. No confirmation needed. The confirmation is the extreme. Stop loss. 167. That's $4 above current price or $3 above the 163 entry. Tight. If we hit 167, the melt-up is still running and you are wrong. Target 1 is 150. That's a $10 to $13 move. Risk-reward approximately 2.5 to 1. Target 2 is 143. That's $17 to $20. Risk-reward 4 to 1. Here's the explicit warning. This trade has a 70% chance of getting stopped out before it works. But if it works, the move will be violent and fast. Size half of what you normally would. Do not add to a losing position. If the first stop gets hit, you walk away. You do not re-enter until we see 167 or higher. The aggressive invalidation is a daily close above 165. If that happens, the shorts are trapped and the next leg up targets 190. The Aggressor, countertrend short, entry, market, 160.95, or bounce to 163.00. Stop loss, 167.00. Take profit 1, 150.00. Take profit 2, 143.00. Risk, reward, 1:2.5R to TP 1:4R to TP2. Invalidation. Daily close above 165.00. Warning. 70% probability of stop out. Size half position. Ever risk more than 1 to 2% per trade on any of these setups. No positions through the next SpaceX announcement window. Elon tweets move markets. Stops are non-negotiable. If you don't set a stop, you are not trading, you are gambling. This is how you survive to trade the next big move. And trust me, the next big move is coming. Let me summarize the single most critical level for tomorrow's session. 150. Watch it like a hawk. If we open above 150 and hold, the melt-up has more room to run toward 175. If we break 150 with volume, the flash to 143 and then 135 begins. That's your line in the sand. Tomorrow's focus. I'm watching the private market funding rates for SpaceX. If the implied valuation starts rolling over there, the public price will cascade. I'll also be tracking the Tesla correlation because that pair trade is getting crowded. If you want the full breakdown on how this SpaceX setup compares to the Nvidia top in March and the Tesla top in 2021, that video is live now on the channel. Tap the end screen right here. Smash like if this gave you a clear plan with exact numbers. Subscribe, hit the bell, and I'll see you in the next one with Bitcoin and the S&P divergence. That setup is even more urgent than this one.